Welcome back, Alpha Hunters. Okay, so we are looking for opportunities in 2022. So that's what we are going to look for today. And I have a list here of a few things I want to look at. There's about 4 stocks that I think are good opportunities, and I think then there are some industries that will be industries to kind of watch as we go from 22 to 23 that I think we will get a good opportunity to get in this year. So we will start off by looking at AT&T, ticker symbol T here. So this is a daily chart, and I will switch over to a weekly chart. And the thing I really love about this chart, and I've had a friend actually been trading this recently. I keep telling him to stay in it. Little does he listen to me, but hey, it's okay. And the reason why I told him to stay in it is because AT&T has recently come down to this long-term support that we hit back in 2009 and 2005. Okay, so this is one thing that I'm really digging about this stock, and a big part of the theme of the things that we're going to look at today. You know, I'm trying to go outside of like the norm and all the tech stuff, and just trying to find things that seem to not be like the normal run that's been going on the past 2 years. Just because a lot of things are really extended, so I'm just kind of looking for things that look more bargainy, I guess, if that's a word. I don't even know if that's a word, but bargaining, yeah, we're going to go with that. So bargaining, we're looking for bargaining stuff. And AT&T to me just kind of fits that. Like AT&T is not going anywhere. They make a lot of money. They make a lot of cash flow as well. And they've just come down to a long-term support. So this is something I really do dig over the next, probably at least this year. And so that's what I'm looking for. And I really wanted to get this video out. And that's another thing is like I wanted to get this video out last week before the New Year's. But we've seen some pops in some areas, and you're going to see them in some of the things I'm going to show off today. But we have seen some pops in the areas over the past 2 days of the things that I really wanted to show off. So I do apologize, but COVID stinks. That's all I can say. So I do like this setup. We did come down and hit a double bottom, and we have bounced hard since then. We do have earnings or dividend coming up here soon, and then earnings in late January. So my expectations, I don't know really have an expectation for the short term. I do know one thing: if it does gap down on earnings, it'll probably get bought up. So I think right now is an okay time to get in. And the thing that I want to do kind of with this series is show off the stocks and what the stock chart looks like, and kind of some of the thesis behind what the stock looks like, and then potentially go look for an options play on it, because you know this is options trading. So that is something that I do want to look for. And I'll be pretty honest, the one that really stands out to me as far as options is the Jan 24, because I'm looking at this for like a whole year type of play. So I'm not looking at this for like a week or a month type play. But the 23, 25 type call strike area, and if you want to go with the Jan 23s, kind of maybe even the same thing, but I'm going to reduce that, see if I can get both on the screen for you. But the thing that I do like the Jan 24s a little bit more, because you get a whole extra year, and you're not paying, like you're paying for a third extra on the price, and really not even, about a third extra on the price, or a quarter extra on the price. So it's just one of those things. I do like the 23, 25 strike option a little bit better for Jan 24. So that is one reason why I do like AT&T. I think it's just at a great support area long term, and the Jan 24 with the 23, 25 strike looks pretty good. Looks more promising to me. And the reason why I think those two is because I think if the stock winds up getting back up into its longer term type trend area, of like the 30, if it gets back up to like $30 or so, I think that's a great reward area to maybe take profits. And so it's just one of those things. Like, okay, so I'm looking for what kind of like reward can I get when I get to 30, and these line up the best to me in my eyes. Yeah, they just line up the best for, like, maybe even a double or triple on your investment. So, yeah, I mean, that's just kind of what I'm looking at. Another stock, though, on this list is gonna be, let me get that up, FCX, Freeport McMoran. So this is a steel play, and man, I mean, it did have a strong bounce off that COVID bear market that we had from COVID, or the pandemic crash, COVID crash. And then we had a very strong run, but most of this past year, especially the second half of the year, it really didn't do much. So this is something that I am looking, as we have like a long-term double bottom here. This is a multi-year, right? This is multi-year because each one of these candles is a monthly chart. But I do think with infrastructure bill and other things that are coming, I also think that there is going to be spending in the area of supply chain and just things like the infrastructure, obviously, spending in those areas where steel is going to be required. You can also look at U.S. Steel. U.S. Steel is not bad either, but I'm just like Freeport McMoran, I think a little bit more. But either one of these probably not going to be too bad. So, and I would definitely be at least looking for a play up into the 62 area potentially this year, which, it's a 20-point increase. That's a 50% increase over pretty much where it's at now. And so let's go look at some options for Freeport McMoran. And okay, so yeah, so kind of my thought, man, what I'm looking at real quick is, so we've got a gamma as a 2, a delta. Okay, I think probably the one I dig the most is maybe this 47. Yeah, I think the one I dig the most is maybe this 47 strike for January of 23. That's probably the one I dig the most. I mean, this Jan 47 or the Jan 24 47 strike, it's just really expensive. It's just a really wide bid-ask spread, so it's kind of a problem. This one's a little bit closer. This is only 35 cents. This is $2.30. So that's which a lot of the Jan 24 ones, they have a really wide bid-ask spread. So that's kind of what's shunning me away from that. But these are pretty tight for just being a year out. So these are pretty good leaps to kind of maybe even get into. And I kind of dig this Jan 2023 47 strike. This is the one I dig probably the most here. And you can go maybe even a little bit out of the money. I wouldn't go too far though, just because your strikes start increasing a little bit faster. So that 47 strike looks a little bit nicer to me, to be pretty honest. So that one, yeah, I mean, it's not exactly exact science on that, but I do like that 47 a little bit more. Okay, so that's Freeport. What's next? We got Boeing. Okay, Boeing. Jeez, man, Boeing. I was kind of torn on this one. Obviously, we have a longer term uptrend. That COVID crash did it a number, which like with most airlines. So if you want to see some of the airlines, here's Southwest. And if I was to do an airlines, it would be Southwest out of all these. There's United Airlines. Here's American Airlines. So yeah, I just like Boeing a little bit more. And here's why I like Boeing just a little bit more. One, it is an airline plane. I think we are on the precipice of being out of COVID. I know. What's the latest variant? The Omicron variant is just wreaking havoc, and I get that. But yeah, I think people are just about done with this, and who cares? Like let's just get past it. Just get done with it. Just move on. And we already saw a lot of people trying to travel and stuff, so people are wanting to get out and travel more. So once we get past Omicron, I do think people are going to be traveling a lot more, no matter what. And so we can see some airlines picking up, and then they will be picking up orders on planes. But here's another reason why, is I'm hugely bullish on space. And I keep trying to find, that is something you will see a theme on my channel, is I keep trying to find really good themes to invest in the space race, the commercialized space race. So I do think Boeing has also a really good tie into that. So that is why I do like Boeing here, and it's a quality company. Like they make good stuff. They make good planes. There's not too many plane manufacturers that make planes the size of Boeing in the world. So they're not going to go anywhere, and the government's going to make sure that they don't go anywhere. So that is a quality play right there on Boeing. So let's go look at some options on Boeing. Now, the other thing is as far as like options go, if we can't find good options, it's not a bad thing to make some good stock plays. So let's look and see real quick where we think this could go. I definitely think it could probably get to 310 this year. I definitely do. And it started off real strong here recently. Yeah, the past 2 days. Man, I wish I would have got this video out last week. Really do apologize about that, guys. But we could, yeah, I think 310 looks good. Okay, so if we think it's going to go to, if I think it's going to go to 310 at least. So let's look and see. So we got some options here. Let's get a little bit wider on these spreads, because Boeing has a lot better options than AT&T and Freeport-McMoRan. Oh, and they also have March 23 options. Okay. All right. Okay, so let's see what's the difference between Jan and March of 23. So 225, it's about $4. $3.50. Okay. So $3.50. Okay. I think I definitely dig the March ones, just because it'll be a little bit more expensive than Jan, but it'll allow it to where if it does make that run that we're expecting, give us a little bit of room to get into next year and get into the long-term capital gains bracket, which I don't really care to worry about taxes too much, because gains, I would rather make the money on the trade than lose the money just to wait on taxes. But if things look good and you can wait to get into that long-term capital gains bracket, I would highly do that. So I wouldn't do the 225 because for March 23, yeah, the 225 calls, I would not do that. It's got a really wide bid-ask spread there. It's way too wide. It's definitely, that's over $5. This one's not too bad. Okay, so maybe the 230, which then if you got in for 27, so that could be like a 4 or 5x type trade on the 230 options. I do like going out of the money on leaps, dude. And I've seen other videos online and other people, like, they prefer in the money. They prefer deltas to like 8 and 9, and I'm not about that, because to me, I'm trading the option. I'm not trading the freaking stock. And I will go more into that in other videos on methodology of why I don't like delta. It depends. Okay, leaps, I don't care for delta that high because I'm looking at how much I'm making with the delta compared to how much I'm paying for the option. And uh, if I'm paying half the stock price in the option, well, then I just buy the whole damn stock. I get you can save a little bit, but I mean, I'd just rather buy the whole damn stock then. So this is something I do dig. I think I do dig this 230 or the 235. The 230 or the 235, I think I dig either one of these quite a bit. Yeah, either one of these I think look pretty solid. And, either one, not too bad. 230 is not too bad just because they're about the same price. And you get a little bit better delta. And the cool thing is you're paying a little bit less. You're paying about the same price, but you're already at a lower strike, so that's good. So a little bit faster for you getting the money. So I do think I do like the 230 call option here on March of 2023. So I think I dig that one a little bit more. Okay, so what else do we got? Walgreen Boots Alliance. Okay. This is just another one of those, I'm looking for bottom of the barrel type things. And it's really kind of interesting here. And this is another one that's kind of ripped it over the past couple days, man. It's so annoying. Look at that. Past 2 days, it just up. Jeez. Sorry. And if you want to see what the SPY's done the past 2 days, not really much of anything. It's just kind of flat and hanging out. And the Q's got hammered today. Show that real quick. So yeah, the Q's got hammered today. So Tech's not looking good. I'm going to go into that a little bit later. But let's get back to Walgreens Boots Alliance. And so I really like this. We got a cup and handle here. So you got a cup, you got the handle, and we hit the 200. So I definitely think it'll probably chop around here. This might not be one you have to get into right away, but I still like it for the year regardless. The area will probably get up to, man, this thing could probably get going maybe up into at least the $80 level by the end of the year. Probably even get higher than that. But the thing I do like about it is you also have this on the monthly chart. It's a little bit easier to see it on the monthly chart, but you can definitely see it on the weekly. You got this inverted head and shoulders action here. And so as soon as it gets above that 50, I mean, it's going to come up and hit some of this stuff. But here's the thing with some of these type companies is these companies make a lot of money that I'm kind of showing off. And if the Fed does start raising rates, I mean, people are going to be flocking into these companies that make money. And the Fed's already announced that they're going to be raising rates faster than what they had planned. So if they, and every time they talk, man, they always talk about speeding up the rate of which they are going to raise rates. So it's like, oh, inflation's not a big deal. And then every time they talk after that, it's like, oh, we're speeding up our inflation, or we're speeding up our how fast we're going to withdraw our bond buying program, and then how fast they're raising rates. And so every time they talk, man, they just talk more about that. So this is kind of one of those things, like companies that bring in cash, good amounts of cash, they have good customer base, they have good reason for customers to come into the stores and stuff like that. And they've hit on earnings at least the past 3 times, so that is also a good sign. So I do think it probably gets up into the $80 area by the end of this next year. I do get that. That's quite a run. That is quite a run, actually. Wow. But it could happen if the rates start raising, the Fed start raising rates and stuff like that. But we pop these levels, and we'll probably start shooting up there. 70, we'll say 70, be conservative, a little bit more conservative. Okay, so 70s, that's about a 17-point price increase. So let's look at some WBA options. So what do we have here? The ones, I think the ones I dig maybe the most could potentially be the 6250 for Jan 23. Let's compare year over year. Okay, so Jan and of 23 and 24. So at least the spreads are a little bit better for Jan of 23. Man, yeah, see some of these spreads. That's a $3 spread. Jeez. So Jan 24, not horrible. If you did Jan 24, maybe this, I would do this 57.50 strike for Jan 24. For the Jan 23, I would probably do this 60 or 62 strike for the, actually I'd probably do the 62 just because that delta is over 10% of the value of the option. So I do dig that. I do dig that a lot. So if you don't see what I'm talking about, the price of the option here, if we think it's going to go to 60, if I think it's going to go to 60 at least. So I'm no way advocating for any of these trades. I'm just saying this is kind of what I'm looking for this year, and I'm about to get into what I'm really looking for this year. This 280 or 279 price leap at 62.50 strike. You know, the delta there is over 10% of the price of that option. So I dig that, you know, and it's really kind of hard to find that anywhere else. Like this one isn't. This one is over 10% actually. This one's about 10. But that one looks just a little bit better to me. So I would definitely do the 62.50 strike for January 23. Or the, what did I say down here? I think I said the 60 strike of January 24. So, or maybe the 57.50. No, I think it was definitely the 60 strike. So, but that's what I'm looking for as far as like plays this year. The other one, okay, so that's what I'm looking for on WBA, and I'll definitely look back when we get to next year, do a recap of what some of these how these trades worked out for this year, as far as like what I was thinking, methodology. But I'm as you notice, like there's not much tech stuff on this list at all. So those are all the leap plays I'm showing off in this video for this year. So give this video a like if you plan on joining me in some of those plays. Here's some other sectors that I'm looking for though, that could be pretty good. Financials, as they raise rates, financials are going to be really good. And they've already started off this year pretty solid, especially today. Like, God dang it, man. Goldman Sachs looks good. So these are just different sectors that I think could be, man, JP Morgan just killed it today. Bank of America killed it today. Wells Fargo killed it today. So I definitely think, you know, you could pick maybe one of your best financials that you like, and you can definitely go out there and you know, maybe get into a leap maybe next year or the year after for January 23 or January 24. Go a little bit out of the money and get in. I don't think you'd have a problem. Okay. So that's just kind of financials. I think will be strong this year as they've kind of underperformed. Definitely this past year, they were just kind of really choppy. But with more talk about, and they've really underperformed the past decade. So it could just be their time to kind of maybe start shining as the Fed really talks about raising rates. That's going to be good for our financials. The other area that I'm really kind of interested in is industrials, and my gosh, industrials, they killed it today. Deere killed the market today, like killed it in a good way. Look at that buying, like my gosh. I also got Cat on this list. I also got Cummings. So you know, I would say do a little due diligence on which one of these you kind of like, which kind of leads you like. But I personally like Deere a little bit more because it has a little bit more of an agricultural play as well. That Cat really kind of doesn't. Cat is more of a pure infrastructure type play. But Cummins and Deere, they have a little bit more diversity across all kind of heavy machinery. So that is what I do like Deere in this case. I also like Cummins as well. But Cat looks pretty good. Had a nice pullback for the second half of this past year. So yeah, looks pretty good. The area that I would be really watching this year is going to be semiconductors. Semiconductors has just been on an absolute tear, and this is a semiconductor ETF, Spider ETF, and this is one to watch as semiconductors typically always leads the market to the downside. When they stop going up, people notice and get real cautious on the market. So definitely be watching the semiconductors. So this ETF is XST, X as in X-ray, Sierra, Diablo, Delta. There we go, Delta. I was like, what's the military phonetic alphabet? Totally freaking forgot. But this is something that can be something worth watching, because I do want to get into some semiconductors, and things I'm looking for is AMD. I'm looking for some pullbacks in AMD. Let me. I'll leave that actually up there. That's fine. But AMD got hammered today. Another one that got hammered today was Nvidia. Also got hammered today, along with all that tech stuff. Now, one area that is very interesting and I actually do have a position on that I'll probably be ending this week. But one area that is very interesting for semiconductors that I don't think you really need to wait is Intel. And the reason why is they have not been in that huge upswing like we've seen with AMD, and Nvidia over the previous couple of years, right? Intel's just kind of been going sideways. They've kind of dropped the ball on doing some innovative type stuff, but I'll be pretty honest. I think the pandemic saved their hiney in some ways. Well, not really saved their hiney, but the supply chain crisis or crunch that we're kind of having to deal with in the world economy has really kind of helped Intel, as other companies haven't been able to get their products to market to take all of the market share away from Intel as rapidly as they would have otherwise. Okay, so I do think Intel was able to do a little bit more catch up in these type of in this current climate we're in, but I do think we will see Intel outperform most semiconductors this year, just because they've already been beaten down so much. But this could be a really good play, especially if it gets up over 56. It could really start rising and definitely get into the lower 60s pretty quick. But this is also one that doesn't move around much, so you could definitely look for a stock play on this one. General Dynamics, like I said earlier, I do like the space play, and General Dynamics does have a very good portfolio of space play type of products. Okay. I'm not going to go into a full-on fundamental breakdown of the company. I'm not going to do that much on this channel. That is not the point of this channel. But it does look good. As far as most other space plays, either they're really look like just dirt crap, so they could also be some good opportunities over there. But they just, their stock just look really bad on the chart. But or they are priced really high, which is another problem. But this one looks really good as far as like the setup. as you got a nice, you just got a nice little saddle here, okay? But I would watch it when it gets up to here because it might come back down and form a lower cup. But I think for most of this year, it could probably run up into at least the 240 area. So it might not be a good setup now, that's another thing with the space plays. I'm not looking for so much the setup this year or getting in for bullish trades this year. I am looking for opportunities to get in for potential over the next 2 years after. So I'll be looking for really the semiconductors. If they pull back, which I do expect they probably will in Q2 or so, Q3, I think tech's probably going to lead us in a pullback. And I do think this year is going to be the great pullback on a lot of things. But, you know, it just is what it is. I mean, the market's just gone high, really fast. So as we get on to this year, you know, we'll see what the inflation and the Fed do with rates and stuff like that. But I think regardless, we'll probably see some good pullback opportunities in some stocks. Semiconductors and space stuff is what I'm looking at for the next few years after, as far as getting in on some good opportunities. So those are some areas that I'm going to be looking for and watching this year. And let me know down in the comment section if there's any other sectors or industries or particular areas of the market that you guys are watching for this year that I didn't even mention here. I just wanted to give a shout out, give you some guys some things to kind of think about, you know, so show some opportunities I think that are going to be really good for this year. And not just, I mean, it's hard to say like right now is the time you got to buy for 2022. I've seen other people say, hey, like these are my top picks for 2022. It's like, that's not how trading works. Like, it's not like buy now and then sell in 365 days. It's constantly evolving and changing, and things to look out for in the middle of the year and the things to look out for at the end of the year, you know. And if it hits your price targets, yeah, that's fine to take some off the table, say, all right, cool, I'm good. So, you know, have an idea of what you're looking for throughout the year. Have an idea of what you're into now, what you want to see out of those things. But okay, but I think that'll do it for now. Anyways, hope you guys have a good 2022. I'm going to start covering some different stock things about how you can develop trading plans on individual stocks. So that is going to be a lot of fun. Actually, it's going to be pretty interactive with you guys. So hope you guys enjoy that as it's coming, probably starting next week. Alrighty, take care, Alpha Hunters.